What's interesting about Apple is that Wall Street reacts to expectations, and Apple is like the perennial sort of A student. This quarter, they had record sales, and they had a really good quarter. But Wall Street reacted and took their stock down about 12%. In dollar terms, it was the largest drop in the stock in one day ever. What happened there is that there are signs that Apple is slowing. Its growth is slowing, and so it's the perennial A student. It got an A minus this quarter, and investors reacted in a very, very sort of extreme way. They're looking at this in terms of what to expect in the future, and Apple's iPhone has done really well. It's continuing to do well in the United States and in Europe. Investors are looking at the iPhone's potential growth in other countries, in emerging markets, for instance, where the iPhone looks pretty expensive compared to other Android phones. And so the prospects for the iPhone's growth globally are kind of dampened a little bit. What it's showing is really the sort of the triumph of mobile computing, the triumph of tablets and smartphones. Apple is essentially a company now that has become sort of heavily reliant on sales of the iPhone and its tablets. And Microsoft is a company that's trying to transition into selling software, providing software for tablets and smartphones.